Welcome to day 2. So yesterday we learned why the Forex market exists and what really moves price. And today we're zooming in, way in, to the very building blocks of every chart you will ever read, candlesticks. Because once you can read a single candle the way a dealer does, the whole chart starts making sense. So candlesticks, or a candlestick, is a snapshot of how price moved over a specific time period. We mostly use the 15-minute, 1 hour, 4 hour, sometimes the daily candle. Now, the body shows where price opened and closed, and the wick shows the highest and the lowest points that price hit during that time. That's it. Nothing fancy. And you'll be shocked how often just knowing this helps you spot what the dealer just did so that you can understand what he might do next. So what do candles tell us? They tell us where the buyers and sellers' orders are sitting. It shows us momentum, whether price is going to continue or reverse, or whether it is currently reversing or continuing, and then possible reversals, which tells us when to enter or exit a trade. If you've ever heard people talk about the bulls and the bears, this is where it shows up on your chart. Green candles are the bulls pushing price up, and red candles are the bears driving it down. So green or bullish means that price closed higher than it opened, and if it's red or bearish, it means that price closed lower than it opened. There are certain candlestick patterns that you're going to see again and again, and there are clues for us. So first up is the pin bar, or a hammer, or a spike. It's a candle with a long wick, which is showing us rejection, and it's usually at a key level. It's a great reversal cue. Then we have the Doji, where the open and the close are about the same. Retail traders love to call it indecision, but more often than not, it's just dealer stalling or a natural cycle end. Next is railroad tracks. So this pattern is two big candles in opposite directions back to back. It's a sudden shift in price, and then it comes right back to where it started. And it often means that we're about to get a big reversal. Now, market makers love to use this trap, to trap momentum chasers. Now let's look at the morning or evening star. This is a 3-candle pattern. It's a push, a stall, and then a reverse. It's basically a doji surrounded by a railroad tracks. Now it shows up at the top or the bottom of a big move. You'll usually see a strong candle, a tiny or doji, and then another big reversal. Now in our style of trading, we use a spike in a different way. So a spike is technically a pin bar or a hammer, but when it's dealer made, we call it a stop hunt. So this will show up right before a big move, for instance. It will drive price up to trigger pending orders. Then it'll bring it right back down, stopping out all of those orders that they just triggered. And they'll take their money before making the real move. Now it's your turn to start spotting these. Let's open TradingView and check out some of these candle patterns in the wild.